Gang, it's a stock picker's market right now. And that's good news for traders like us. Look, in terms of momentum, technology, consumer discretionary stocks, well, they're all on opposite sides of each other. Let me give you an example. Tech is number one, while discretionary is number nine. That means markets are fragmented. What does it mean? It means you need to be extra selective with your trading. It's not the time to buy an index and just hope that it goes up. You've got to be nimble right now and only trade the best setups. Today, I'll tell you all about fragmented markets, how to trade them, and I'll give you one of the hottest picks going on right now. Folks, before you fast forward to the part where I share the ticker symbol, stop. First, let's talk about how to trade it. Otherwise, you're just flushing your money down the drain. I don't want that. And I want to see you win big on this one. So do yourself a favor and stick with me here for just a few minutes. Then, after I give you the pick, click the button below to find out even more trades on my radar right now that are perfect for this type of fragmented market. All right, let's get down to business. All right, folks, let's get down to business. What are fragmented markets? Why is it important? What do you need to know about? I'll explain this to you. As most of you know, especially if you've been following me for any length of time, stocks, especially large cap stocks, they have a very strong correlation to the overall market. As a matter of fact, most stocks in the S&P 500 have a correlation of 0.66 or higher, which means they move along with the broad market about 66% of the time, which makes perfect sense, actually. Let me just mute this out so we're not interrupted here. So as I was saying, when markets are fragmented, all right, you start seeing different sectors of the economy move in different directions. For example, let me give you a good example. And this is actually happening right now. Typically, technology and consumer discretionary stocks, they move neck to neck. Remember, the S&P is divided into 10 major sectors. Some will tell you it's 11 sectors, but it's really 10 major sectors. The internet or I think it's communication sector, that's just technology. So you have 10 major sectors. Each one is made up about 40 to 60 stocks. 10 sectors, 500 stocks, 50, 40, 60 stocks in each one. And that kind of gives you a blueprint of where each sector goes. And what you'll typically see is this. Utilities will lead. That's defensive. And construction and utilities leading. That means technology and consumer discretionary will be all the way in the last spot. Or let's say technology leads. Then consumer discretionary will always be in the second spot. They're always tied to each other. So it's very rare that you would see technology and consumer discretionary in different parts of the economic cycle or the different sectors. In other words, it's rare to see consumer discretionary lag and technology lead. It doesn't make any sense because look, Amazon. Is Amazon technology or is it consumer discretionary? Apple, iPad, is it technology? Is it consumer discretionary? You see the issue there? So right now, you're seeing sectors that typically move hand in hand. They're not moving hand in hand. So what does that mean? What does it do to you? How does it impact you? It means the markets are not fluid. That means trending is very, very impacted. That means markets will move more randomly and less trending over the near term. And usually that happens. Markets become fragmented, sectors become fragmented, stocks become fragmented right before a market has a minor correction. Now, stocks are overbought right now, and we're overdue for a very small, I would say a soft landing, down to the 200-day moving average. But once you see that, you will see all the sectors become fragmented again. It's kind of like what we're seeing right now. It's kind of like, imagine each of my arms is being pulled by a different horse in different directions. That's how the markets are right now. Small caps are trading at the 200-day moving average. The broad market has 55% of stocks that are bullish. S&P's got 75% of stocks that are bullish. Like I said, consumer discretionary is in 9th place right now. So that means markets are very fragmented, and that's a time to lower your exposure. Now, let me say one more thing. I want to give you a pick, a good stock that's under the radar right now, Amgen. Biotech right now doesn't have a lot of cross-contamination with China. Healthcare stocks are by nature defensive, and they do well when growth is not coming through like material stocks and production stocks that really slow down. So right now, one of the stocks I'm looking at, and it's on my first strike portfolio picks is Amgen, all right? Ticker symbol AMGN. The stock is making fresh highs. It has not been impacted by this downside we're seeing, and the numbers are really solid. Am I suggesting you buy Amgen right now? No, I suggest you wait for a pullback to about the 215, 210 level and then go long there. It's trading at about the 225, 220 level right now. Again, I'm not looking at the market in real time. I'm talking to you, but it's right around the 225, 220 level. I suggest you wait for a minor pullback and go into Amgen. I think it's going to work out well because it doesn't have a lot of cross-contamination with China, and it doesn't have a big stake in this trade war, which is driving this market. Hope that helps. Want more picks? I've got 3 more for you, and they're about to explode. Plus, all the details that you need to help you squeeze every last drop of profit out of these, including entries, exits, and profit targets. No one else is watching them, but we're ready to strike. Click the button at the bottom of this page now before the imminent trading opportunity passes you by. I'm really excited about this, and I want to share this with you now. Click the button now, and I'll see you there.